Hey, good morning. Jayaram from Almus Market Morning. Global stocks had a good day yesterday, helped by a correction in yields, short covering, and another set of better earnings report from tech companies. Investors also took comfort in positive news headlines over the recent days, suggesting tensions between West and Russia over Ukraine may be easing. Reportedly, even Germany is adding efforts to de-escalate the crisis. Also, there is a sense, at least among a section of the market, that market is assuming too much too fast from Fed, and that is likely to moderate in the coming days. Interestingly, Fed's boasting also said we are at the cusp of an easing inflation, which could have seen some profit taking in stocks and bonds. However, we would like to watch today's CPI data, as a number as high as 7.3 is expected, while another while it will anchor 0.5 rate hike in March meeting. Currency traders seem to be sitting on hands ahead of the event, and I would expect a burst of volatility after the data. My bias is for further weakness in the dollar against major currencies. As for the domestic economy, it's a double whammy. Morning, we have the monetary policy decision, which is crucial for our financial markets. The central bank is walking a tightrope as it considers conflicting influences from higher inflation, need to control yields to smoothen government's record borrowing, and also global tightening financial conditions. My expectation is for a hike in reverse repo rate by 30 to 40 basis points, thus narrowing the corridor between repo and reverse repo rate, and to maintain accommodative stance. Measures to address the demand side of the bonds may be contemplated, like increasing the hold to maturity limits. While inflation projection may be slightly pushed up due to influence of higher oil prices, growth projections may be slightly revised down. Maintaining the status quo would be seen as central bank staying behind the curve, and it will be negative for the rupee. Irrespective of the tone of the policy, rupee is seen in a gradual weakening path towards 75.30 near term, as flows are net neutral to negative, and import interest is likely to increase with a good fall in the premium. Thank you. Have a nice day.
Thank you, JK. Globally now, the function has totally shifted from a liquidity infusion to liquidity tightening. So everywhere inflation test will be, people would be going through that. The inflation test in US is today. They will be releasing CPI numbers, which is likely to print 7.3% per annum. This led into a 10-year USD around 1.93%. And what we are seeing is a consolidation in bond yields across the globe before this major CPI print. Now, US fund futures have almost priced more than 125 basis rate hike during this calendar year, and there is a 30% probability of 50 basis rate hike in March. Indian MPC will announce their meeting outcome today morning at 10 a.m. There is a wide expectation that they will increase reverse repo rate by 20 to 40 basis points to align rates with the realities. Further, interest rate market will be impacted by increasing repo rate, which will take time. It is going to take much longer. Market participants will look for a statement for liquidity normalization and how RBI will manage large central government borrowing. There are few economists expecting increase in CRR rate and resorting back to increase in STM limits for banks. In our expectations, both are unlikely. RBI might announce steps towards RBI digital currency today in a structural and development part of the policy, which basically a follow-up budget announcement of RBI launch of a digital currency. Indian 10-year GSEC yield closed at 680, awaiting MPC result. It is not expected to dip below 675 and might move towards 690 today. That's all from me. Thank you. Have a nice day.